Hello friends, hello everyone, and welcome back to this webinar series part two, Yashaswini and Idol. As we have started with this new year, new theme, and every month we are bringing up with the new theme. This month we are coming out with internal audit and opportunities we have already taken up, and this time we are coming out with the internal audit on. Role of internal auditor into sustainability and role of internal auditor into NBFC and BFSI sector. And I'm happy to have CA Muskan as the speaker and CA Dipti Rathore as a speaker. Both are very dignified speakers and contributing a lot for the Institute of Chartered Accountants of India. So I welcome Muskan and Dipti, both of you, to this series Yashaswini and Idol. So the name, how we have thought of is all about it's a Yashaswini means a successful women, and an idol means it is all about inclusivity, diversity, with which the outstanding performance which women are doing for coming out to be the leader and the great leadership. And we have with us CA Daya Bansal, Daya Bansal as a moderator for Bhanusali Jayanti Subramanyam and Kimi Nagra. So I welcome all the moderators who will be moderating this session, and along with all my beautiful, intelligent women participants. Please stay in touch and go through this entire series, webinar series, Yashaswini, with as the theme suggests. This all is leading. This the series is leading to the success and yash to all of you. And with these words, I welcome all of you, and I wish you a very best learning for this today's session. So thank you very much. And I also put appreciation the work which has been done by team WMEC team and who are working day and night for the benefit of entire women fraternity. So friends, we are coming out with International Women Conference on 29th of June, where that is an opportunity to meet the leaders who are in India as well as international level and interact with them, and there are a lot of opportunities to network and ensure that we also come and go to the next level. So mark your calendar for 29 June for International Women Conference, which will be happening for the first time at ICAI, and this will be held at Mumbai. So mark your calendar and ensure that you are part of this conference, taking the benefit of this networking and the excellent speakers and sessions which will enhance your leadership and add to your valuable knowledge. So let us meet again on 29 June along with this Yashaswini series every Wednesday 3 to 5. So signing off this CA Preeti Savla, chairperson of Women Members Excellence Committee and your own Central Council member of ICAI. With these words, I once again welcome all of you and over to Kimi.
Thank you, ma'am. So I would like to introduce CA Muskan Jain, and I feel extremely honored that I can introduce such a talented person. Muskan is a young sustainability professional working with Global, a Singapore headquartered advisory and compliance firm. Muskan is also a chartered accountant and ICAI certified BRSR professional. She is currently working with listed companies on ESG assurance and sustainability reports across Singapore and Hong Kong. With this, I would like to welcome CA Muskan Jain and over to her.
Thank you. Thank you so much, Kimiji, for such a warm introduction. Good afternoon, everyone, and thank you for joining. I would like to start by sharing my screen. Please let me know if that's visible. Okay, okay. So before I begin, I would like to start by sharing a quote by Robert Swan, which says that the greatest threat to our planet is the belief that somebody else will save it. With this in mind, let's delve into why sustainability has become such a prevalent topic of discussion and what we as uh, internal audit professionals can contribute in this area. Earth Overshoot Day marks the date when humanity's demand for ecological resources and services in a given year exceeds what Earth can regenerate in that year. This was marked on 2nd August in 2023 and is expected to fall on July 25th, 2024. As you can see, there is already faster depletion of resources which is happening over the years in these areas. This imbalance will result in borrowing resources from the future, accelerating the depletion of natural resources even further. As the Native American proverb wisely states, we do not inherit earth from our ancestors, we borrow it from our future children and future generation. So, with this narrative in mind, let us look at the change in the risk map which has happened over the years. So, as highlighted by the World Economic Forum in 2022 report, 8 out of 10 top global risks by severity over the next 10 years is relating to the environmental and social risk. This leads us to the question that what is sustainability? Sustainability is meeting the needs of present without compromising the ability of future generations to meet their needs. For corporates, sustainability is a business strategy for long term growth. It aligns with the triple bottom line principle of people, planet, and profit. It is not just about how you are utilizing your profits, that is in terms of CSR. It is more to do about how are you generating the profit, whether the profit you're making is in the sustainable and environment friendly manner. Also, it is important to note that sustainability is not just from the environment point of view. There are three pillars of sustainability: environmental, social, and governance. Environmental pillar focuses on prioritizing eco-friendly practices such as resource conservation and mitigating and reducing carbon footprint to mitigate impact on the environmental business aspects. Social pillar, on the other hand, is relating to the community we are serving, relating to the employees, and relating to the human rights protection in general. Governance principle upholds this transparent decision making, ethical business conduct, and regulatory compliance requirements. These principles are essential for fostering accountability and ensuring long term stability of the organizations. So far, we have seen what is sustainability. Now, let us understand why is sustainability getting prevalent and what are the drivers of sustainability. Among various stakeholders, such as regulators, investors, employees, customers, and ESG rating agencies, there is wide need for sustainability reporting. From regulatory point of view, regulators want to understand how much business is contributing towards the environment, social, and governance related risk. Regulators have increasingly mandated a lot of sustainability reporting related compliance requirements, which in turn leads the company to take this area into consideration in their total business operations. Investors and lenders are more aware in this area because they want to invest money where it is going to be sustainable in the future. The demand for sustainability reporting from investors and lenders reflect a growing awareness of environmental and social risk and the opportunities in this area for long-term financial performance. Employees are the key resources of any organization, and I feel employees are the ones who are directly associated to the business. So for them, the sustainability reporting is important to understand why and how the business is going to look after the well-being of the employees. how the business is going to retain the employees, how are they going to introduce the sustainability principles in this area. Customers are buying products and services these days from the brands which are more sustainable, which are more environmentally friendly, and which are more eco-friendly to the entire society. ESG rating agencies have come up with various rating regulations as well as various rating guidelines, which is seemingly influencing the investment decisions these days. These helps in encouraging the companies to disclose comprehensive sustainability information to improve ratings and investments. So, what is sustainability reporting? Sustainability reporting is a report of non-financial factors to publish the performance and impact of a business on wide range of sustainability topics encompassing all the three pillars like we discussed previously, that is the environmental, social and governance parameters. The purpose is to identify, assess, manage and mitigate ESG related risks so that the business can sustain and contribute for the well-being of the society in the long term. There are various sustainability reporting frameworks. Few of the notable frameworks are highlighted here. That is the GRI, Global Reporting Initiative, TCFD, Task Force on Climate Related Financial Disclosures, SASB, that is Sustainability Accounting Standard Board, IIRC, International Integrated Reporting Council, ESRS, European Sustainability Reporting Program, and in India, our very own BRSR, Business Reporting, Business Responsibility and Sustainability Reporting. To understand BRSR, let us first understand how was the sustainability reporting journey in India. In the year 2009, a Ministry of Corporate Affairs introduced national voluntary guidelines on CSR. From there, the journey began, and in the year 2012, SEBI mandated that top 100 listed companies will file the BRR based on the NVG principles in their annual report. Consequently, up to the year 2019, this requirement was expanded from 100 top listed entities to 1,000 top listed entities by market capitalization. In the year 2021, BRR was replaced by BRSR, and recently in July 2023, SEBI introduced BRSR code for reasonable assurance, mandating top 150 companies to get reasonable assurance on their BRSR code parameters. So far we understood what is sustainability, what is sustainability reporting. Now we will understand the challenges, which is where we as internal auditors can step in and provide a lot of value addition to the clients. The challenges in sustainability reporting are humongous because this is still in the nascent stages. Here we can understand the differences between ESG reporting and financial reporting. In financial reporting, we report the data based on the control aspect, whether the company is having control on particular uh, area is where we consolidate the matters. But in ESG, the difference is that we have to look at from the influence point of view. Thereby, the reporting boundary is expanded to include the supply chain, the upstream and downstream value chain partners, as well as other market participants who are in the same domain. The other key difference is the quantitative and qualitative aspect. So financial reporting is majorly in the quantitative aspect, whereas where there are a lot of numbers and numerical parameters involved. But if you see the ESG or sustainability reporting, it has more to do with the qualitative factors, and these qualitative factors are both technical and tricky in nature to understand. The last difference in the ESG and financial reporting, which we can discuss now, is the historical and forward-looking aspect. In ESG reporting, a lot of emphasis is given on the forward-looking aspects, where the company sets the targets, goals, and commitments for sustainability in future. It has more to do with the future rather than reporting on the past data. Other than the differences in the financial reporting, more data complexities and challenges are involved with the sustainability reporting. Here, there are a lot of frameworks, like I previously told, GRI, Task Force, BRSR, etc. So, what is happening is the companies are following various frameworks, but they are not consistently applying all the principles of the framework. Since the frameworks are voluntary in nature, the companies are choosing the principles which they want to disclose. This creates a lot of challenges in terms of gathering the data and reporting. The next key challenge will be the acceleration towards regulations. Every day, we are seeing that one or the other new regulations are coming up globally. And the challenge is to keep all the regulations in mind and to deliver in such a way that all the regulations are taken into consideration. There are novel data streams, which means that the data for sustainability reporting has been taken and consolidated from various sources. There is no one particular fixed data stream. And also, the data is not just relating to one particular parameters. There are various parameters like environmental parameters, waste generation, climate change related parameters, emission parameters, water related parameters. When we come to social aspect, there are employee well-being related parameters, turnover rate parameters, and so on. So the data stream for each parameter has to come from different areas and different departments within the same organization. So far by this, you would have got to know that the data complexity challenges because because the ESG reporting framework is not digitized to that extent, and there are immature systems. So IT controls relating to this area are not established. This is also a key challenge in the whole ESG reporting framework. Moving on to the next challenge, that is challenges on data consistencies. There is a lot of data which is coming from different departments, as I mentioned. And also, there are a lot of other regulatory reporting which is happening. So, the task here is to ensure that what reporting is happening from the organization's point of view across various regulators are consistent, because the reports which we are filing, at the end of the day, there is some data which is getting into the system. So that data should not be contradicting in itself. These are few of the major challenges which are there with the ESG reporting. Moving on to why to establish an internal control system and what will be the benefits of internal systems for the sustainability control. By establishing the internal systems, we can align the stakeholders with the organization's purpose and stated objectives. Establishing internal control systems also improves the data quality, comparability, and reliability. By all this, we are able to support operations and the various compliance objectives, because the companies are required not only to comply with the national regulations but also with the international regulations across the globe. So that is why it is very important that a control system is established, so that there is an audit trail for all the documents, all the reporting which is happening across all the regulators. This will also help in empowering informed decision making for the management and the stakeholders. By understanding the internal systems, it will help us understand the risk in turn and help us enhance the mitigation capabilities. The financial benefit to this is we can also reduce the cost of resources by utilizing the resources in a conservative and more efficient manner. It also helps us to access lower cost of capital for the company. Moving on to ESG assurance. Since the data is being asked by all the regulators, it is important that the data which is getting published is having some form of assurance, so that the companies are rest assured that they are not falling into the risk of greenwashing. So there are three key types of assurance: internal assurance, external assurance, and expert certification. For the for this discussion, we will be focusing on the internal assurance part, because that is something which internal auditors can offer. So, role of internal auditor in this entire picture. Internal auditor can add lot of value to the ESG reporting system since this is in the nascent stages. The idea here is to use all the capabilities which we have built across the internal audit function of the financial reporting domain and apply the same principles and practices towards the sustainability reporting, thereby creating a base for reporting and compliance mechanisms of the company. Internal auditor can perform ESG readiness assessment, thereby understanding and assessing the current ESG maturities of the company to know where they stand and what improvements gradually the companies can make towards getting themselves completely ready with the compliance principles and regulatory requirements of ESG. Conduct materiality assessments. Materiality assessments is where the internal auditors conduct surveys, understand what topics, what impacts, and what areas are highly material to the stakeholders. These stakeholders include both internal stakeholders, that is, the employees and the management, and the external stakeholders, which includes all the value chain partners, customers, supply chain managers, etc. By conducting materiality assessment, a business can get an overview of what topics are material and can strive towards focusing on those topics on priority so that gradually they can move towards the ESG readiness. Internal auditors can also help in conducting the risk assessments. Various ESG related risks can be mitigated and can be controlled if proper risk assessments are undertaken. So, internal auditors can help the management conduct a risk assessment based on the topics which are identified as material by both internal and external stakeholders. Internal audit function can also help in ensuring that there are adequate governance and supervision across the reporting capabilities, what are happening. We can help in design and implement internal controls. In financial reporting, there is only one domain more so, but in case of ESG reporting, that since the data is coming from different departments, different set of internal controls have to be established for each department. And not just designing the internal controls, the major challenge lies in implementing those internal controls. So with the experience what internal auditor carries in the business, in the client, in the company it is working, it is very easy for the internal auditor to leverage those capabilities into ESG reporting and ESG related design and implementation of internal control. After designing and implementation of internal controls, the internal auditor can also assess and monitor the performance of internal control, whether they are working as designed and whether they are implemented across the organization in a smooth manner. Internal auditor can help integrate the sustainability information into existing reporting systems. The current ERPs are not well structured to gather data relating to ESG parameters. For example, let's say in case of fuel consumption, we are now recording only the value, the expense which the company has to book. But when we bring in integration, we will also have to record the quantity of fuel, the type of fuel used, where the fuel was used, so as to enable us report in a better manner where we can give the data towards energy consumption and emission factors respectively for that fuel. So this way, integrating sustainability information with existing reporting systems will prove to be a smooth transitioning and smooth flow for reporting of the ESG related reports. We can also help in conducting regulatory review and peer benchmarking. By regulatory review, what I mean to say is, since there are a lot of regulations around ESG, both nationally and internationally, a thorough review of what regulations are applicable to the company and what guidelines and what compliances the company has to do can be managed and controlled by the internal auditor. The entire process of materiality assessment, of establishing systems and controls in place, will enable the organization for reliable data collection, validation, analysis, and reporting. Internal audit function can also assess the ESG commitments made by the company, the targets which the company has set, and the progress with which they are going forward. Conducting vendor due diligence has also to do with this function, because vendors are an important source uh, of all the ESG parameters which we are looking at. Even the BRSR has mandated of the top 250 listed entities from next year to report on their sustainability parameters for their value chain partners as well. So conducting these type of due diligence will A, save cost to the company, and B, help the company in aligning their vendors towards its own sustainability goals. All this will is a steady process wherein step by step the things are taken forward, and internal auditor can from the beginning to the end ensure that the process is smooth, the transition is smooth, and continuous process improvements are taken place. Now that we know the role of internal auditor, it is also important to understand the standards which are applicable for internal assurance. When discussing internal audit, it is essential to consider the highly established frameworks such as COSO. COSO's internal control integrated framework, ICIF 2013, offers comprehensive guidance on the internal control aspects for financial reporting. Recently, in the I think recently in June, COSO also released interpretive guidance on the ICSR principle, that is internal control for sustainability reporting principle. This guidance in particular is beneficial for finance and internal audit professionals with significant experience and expertise in applying the frameworks to financial reporting, which can similarly be adapted for controlling sustainability related information. The COSO framework comprises of five key components, being control environment, risk assessment, control activities, information and communication, and monitoring activities. These are the same five components which are there for the internal control of financial reporting, thereby leveraging the same principles and ideas to sustainability reporting can help ensure that expertise of internal audit function is carried to the sustainability reporting area as well. The COSO framework also has around the five components, it has 17 principles. These 17 principles are uh, act as a base for any organization to set up their internal audit function around the sustainability reporting. So it is not that a separate internal audit function has to be set established for this sustainability reporting. The existing internal audit function can also be molded and redesigned in such a way that sustainability principles are also taken into consideration. This entire exercise has 87 points of focus, which is briefly discussed in the COSO framework. Let us run through the principles. The first principle is commitment to integrity and ethical values. Here, the role of internal audit is to ensure that we are not letting the company give information which is unethical, and the governance principles are taken into consideration. Greenwashing risks are mitigated. The next principle is independent board of directors oversight. We are establishing a framework wherein the board of directors are independent and they are giving their insights, and tone at the top is set to that extent. Then the other 17 principles are listed. I highly recommend all the participants to view this guidance for more detailed perspective on this important area. Is the future of internal auditor in sustainability sustainable? So this is a question which is increasing. So as to say, because sustainability reporting initiatives are increasing, the companies are mandatorily as well as voluntarily picking up this reporting practices in their entire compliance mechanism. So I would say that with increasing compliance requirements and growing emphasis on assurance, the potential for internal audit is significant. This is so because each area while developing requires lot of expertise, lot of background work, and lot of professionals who have already spent time in the foundation so that they can help the organization come out of the various compliance risk and requirements which this field has to offer. According to a 2023 report by Audit Board, it says that two-thirds of the organization worldwide have not established ESG control so far, and 60% do not conduct internal ESG audits. So, by this, you can understand how big and how substantial impact can be created by internal auditors in the domain of sustainability. This entire narrative is supported by the three pillars, like we discussed initially: the environment, the social, and governance pillar. So now the world is moving from profit mindset to the mindset where entire sustainability practices are inbuilt in the company's system. Here, as internal auditors, we have a chance to elevate our expertise in sustainability related matters and proactively prepare ourselves for the ongoing enhancement of the internal audit requirements and build capabilities specifically dedicated in this domain. So that as the compliance requirement increases, as the growing emphasis on assurance increases, we are also ready with our entire capabilities in this area so as to serve the clients better. With this, we come to the end of the presentation. I hope we were able to add value to it. And internal audit function is just an extended hat for accountants in the sustainability domain. We already have the required capabilities. We already have the required network, collaboration, and participation. The idea is to leverage that expertise and experience in this field to extend it to our entire sustainability reporting framework. So I would like to conclude my discussion here. We can please take up the questions if there are any.
Hi, Muskan. Actually, there
Yes.
are no questions because your explanation was so lucid and so clear that there are no questions as such.
Sure, sure. Thank you. Thank you so much. Thank you all for the attentive listening. I would also like to express my sincere gratitude to Preeti ma'am for giving this opportunity, as well as to the entire team at WMEC for this seamless support and organization. Thank you.
Also, Muskan, I have been given the noble task of presenting the vote of thanks to you today. So I am sure you all would agree that CM Muskan Jain has given us a very detailed information on the ESG project lead. She's tried to explain the topic in as easy manner as possible by throwing light on how is ESG reporting different from financial reporting, what are the roles of internal auditors, etc. Ma'am, we are very thankful to you for your time and thank you for taking out time from your busy schedule. Thankful to you. Thank you so much.
Thank you so much.
seasoned professional with expertise in internal audit, risk advisory, and business process improvement. She had she has had a remarkable career that encompasses engagement with both multinational and domestic companies within the BFSI realm, including notable names like Geo Finance Limited, JM Financial, Fed Bank Financial Services, etc. Her contribution extend beyond the confines of her immediate roles, as she has also speaks at industry forums to express her views. Apart from being a fellow chartered accountant, she is also a certified information system auditor. So over to Dipti ma'am.
Yeah, hi. Can you hear me? Is my is my voice audible?
Yes, ma'am.
All right. I'll just try and share my screen. Are you able to see my screen? I'll just stop. One second. Sorry. There's some technical glitch. How to? Is it better? Hello.
Yes, ma'am.
All right. So the topic today that we are covering is about the internal audit in the BFSI sector, and hence the evolving role of internal auditors, because we've seen the BFSI sector evolving over a period of time, and I'm going to talk about, six key components. The first one, trying to give an overview of the BFSI industry and internal audit in BFSI sector in India. I'll cover the regulatory compliance, regulatory framework and compliance requirements, risk management and risk-based internal audit, technology's role in internal auditing, internal audit and fraud, and couple of case studies to walk the audience through. Now, talking about the BFSI sector industry, and giving an overview, we've seen that what does the BFSI industry, comprises of? It is banking, financial services, and insurance sector. It provides a wide range of financial services and products to consumers, businesses, and governments. It includes traditional banking institutions like commercial banking, savings and non-banking financial companies, investment banks, insurance companies, and so on and so forth. Now, the entire industry is a very complex and is very heavily regulated sector with strict rules and regulations governing its operations to ensure the stability and security of the financial system. Um, so that's what the BFSI industry does. We've seen some recent trends in the BFSI industry over a period of past 1 decade, and more so post-pandemic, where the entire digital revolution has, being witnessed in the industry. We've seen some of the developments and have cherry picked some of the key developments in the industry. The first and the foremost thing is in terms of the digital transformation. We've seen increasing adoption of technology and digital platforms to provide financial services, which includes online and mobile banking, digital wallets, robo advisors, insurer tech, and so on and so forth. Enhanced customer experience. We've seen the industry very widely adopting technology to ensure that the customer experience are getting enhanced with offering personalized services and simplifying all their processes. There has been seen a spurge, rising demand for alternate financial products. We've seen this big time in alternative financial products such as peer-to-peer lending,
B2C lending, and so on and so forth. There is also heightened regulatory oversight on the entire BFSI sector to prevent the sector from any systemic risks, which we have seen big time in the ILFS, crisis. Now, coming to the types of services which is being provided by the BFSI industry, we've seen, so the BFSI industry provides commercial banking and financial services. It also provides investment banking, insurance, asset management, and financial products. So these are some of the variants in which the services which the BFSI industry caters to. I'll not delve into much because it's quite self-explanatory in terms of the information that has been captured here. Moving to the next slide. So now some of the major challenges which we've seen the BFSI sector in India, which the sector is exposed to. The first and the foremost is regulatory compliances. As I had earlier also mentioned, there is this entire sector is heavily governed by various regulations, be it SEBI, RBI, IRDA. The second one is on the customer trust. Because RBI has been also very much, time and again coming up with strict regulations on fair practice code and the way in which, the industry has to deal with the customers. It has to be very fair and transparent in terms of dealings and the transactions. Governance and risk management also is the talk of the town, where the industry is expected to have strong governance and risk management within their controlled environment. In terms of technology adoption, we've seen that the industry is also grappling with the way the technology innovations have happened. We've seen companies. There have been legacy systems which are there, and every next day you find some new technology development coming into, and the companies are grappling with adoption of those technology to stay relevant in the market so that they don't lose on to their customer database. Economic downturns, funding cost is again one. Some of the NBFCs, particularly where the NBFCs where the NBFCs have certain challenges because of the rating which they get from the rating agencies. So they have some challenges there. There is a huge amount of competition. Increase in competition is what we're seeing, and so on and so forth. So I'll not delve into other areas. So it's again self-explanatory in terms of the credit risk is again one of the major challenges which is the BFSI sector in India is faced. Cybersecurity, the last one, 12th one, I should, I thought I'll just take a pause and, delve upon the cybersecurity over here because of the technology development and the digital evolution coming into the paperless, digital journey. Everything is digital, and hence the need of an hour is the companies adopt heightened level of cybersecurity and information security to protect their data and the customer database. So now let's understand some of the regulatory framework and compliances which the BFSI sector is exposed to. Of course, Reserve Bank of India, it's a regulator for the banks and payment systems. It governs the monetary policy and banking operations of the entire financial services in India. We have SEBI, which regulates the securities markets, including stock exchanges, brokers, and listed companies. We have IRDA, which is Insurance Regulatory and Development Authority of India, which oversees the insurance industry overall in India, which includes your life insurance, health insurance, and general insurance. And also it formulates guidelines to safeguard the policyholders' interest. Now, coming to risk-based internal audits and enterprise risk management in the BFSI sector, and it's In BFSI sector, and I'll talk of from my experience where it's been 20 years when I started my career as an internal auditor. I've seen a huge amount of evolution that has happened in the internal audit space, particularly in the BFSI, where when we started with internal auditing, it was more to do with checklist driven. Now we are talking of risk based internal audits, prioritization of internal audit plans, looking at the perceived risks that we foresee in the control environment, and hence, having a plan in place to cover all of the, critical risks, in terms of the pecking order of priority. We've seen RBI coming up with, regulations which talks of risk-based internal audit. RBI has also, come up with this circular which talks of empowering the internal auditors, right from giving them stature, authority, independence, and so on and so forth. So that's where the regulator has been also looking at strengthening the internal audit within the BFSI sector, so that the third line of defense becomes stronger. So, what's the key objective of internal audit in the BFSI sector? And it's not about BFSI; it's about overall as an internal audit function. Its roles and responsibilities are concerned. So the main objectives are, of course, it's a review of internal controls within the respective organizations, compliance assurances, risk management, operational efficiency, fraud detection and prevention, and governance enhancements. We've seen that internal audit is a cornerstone of corporate governance in the BFSI sector. It provides an independent and systemic evaluation of the effectiveness of the organization's risk management, control, and governance processes. And as the financial horizon grows increasingly complex, the significance of rigorous internal audit system cannot be overstated. So this is where the importance of internal audit, rest, and and hence the fiduciary responsibility towards the regulators, towards the stakeholders, be it our shareholders, investors, board of directors, audit committee, and senior management. So, what is enterprise risk management? I will not. I will explain this in the later slides, but just wanted to abreast that ICAI has issued standards or internal audit which talks with respect to enterprise risk management and governance framework. This standard seeks to clarify the concept and also the responsibility of the internal auditor, management, and other stakeholders with respect to risk management, keeping in mind the legal, regulatory, and professional obligations. I would strongly recommend everyone in the internal audit fraternity to look at and go through the standards on internal audit, which has been published by ICAI. These are the binding, guiding principles which every internal auditor should and must understand and follow. Now, what is enterprise risk management framework? So, enterprise risk management framework is in a very simple terms. I would like to explain here is that the company recognizes its risks and the risks universe, and identifies and establishes risk appetite and tolerance, and then once the risk appetite and tolerance is established, identified, established, then we have the mitigating strategies to address those risks. And also you'll have a risk mitigation strategies in terms of the risk response that rests within it. So when I'm talking of risk response, is where the organizations, they understand that how are they going to respond to a particular risk, as and when any event, untoward event, occurs. Be it, I call it Atma. So it is ATMA, which is A stands for accept. we can accept the risk as is, and move on. Stands for transfer, where the organizations, they generally tend to transfer the risk. A simple example could be that we are transferring the risk by taking insurance. Then M is mitigate the risk. Basically, it's nothing but you institute controls to address those risks. So these are internal controls which rest. A type or an example of internal control will be that you've instituted segregation of duties, or yeah, to avoid conflict of interest, or there is a maker checker controls within the system, and so on and so forth. And A is nothing but avoid the risk, which is not the right way to treat a risk. But many organizations, if they've tried to avoid the risk, which means that there is no preparedness. Though they have been aware that there's a risk that exists, but they are not prepared and get up to mitigate the risk as and when it comes, as and when any event occurs. So this is the enterprise risk management framework. So generally, ERM is a CRO's responsibility, the chief risk officer's responsibility in any organization, and it falls under the second line of defense, where the risks are identified, monitored, measured, and tracked, and also tested on a frequent basis, and tracked for closures if at all there is any observations which gets reported and identified. Now coming to risk-based internal audits. Risk-based internal audits I'll just explain in the next slide what is the risk-based internal audit all about. So the broad steps for formulation of an RBIA plan. The first and the foremost thing for an internal audit is to understand the audit universe. So the moment we understand the audit universe, we divide the audit universe into auditable entities. And once these auditable entities are identified, there is a detailed risk assessment approach that has been followed. What is risk assessment? Is nothing but we identify the inherent risks that rest within each of the process or the sub processes. What are the controls that the organization has instituted to address those risks, and then come up with a residual risk score, which is nothing but you test the inherent risk in terms of likelihood and impact. You do a control assessment in terms of design and operating effectiveness testing. And then once you've done the inherent risk assessment and the control risk assessment, you come up with a residual risk assessment, which is inherent risk minus control risk equals your residual risk assessments. And that's how the plan gets formulated. Ideally, the plan is once the plan is ready, the internal audit is also expected to apply qualitative factors, and there is a guidance which RBI has also provided in terms of the qualitative factors, which ideally the internal auditor should apply while drawing up the risk-based internal audit plan, which has to be discussed internally within the company, so that the plan is relevant in terms of the future strategy and projections, be it technology or businesses. And then it gets placed and tabled to the audit committee or board for an approval. However, the plan, my recommendation is that always we should keep this plan agile and to stay relevant. If there is any perceived risks in the control environment, the plan has to be also accordingly changed, so that we are able to prioritize the key risks in the organization and cover as and when any key risks are noted or notified to the internal auditor, and we give an enhanced assurance to the audit committee and the board and the senior management about the operating effectiveness of those areas. Now, moving to technology's role in internal audit. So we've seen there's a huge amount of change over a period of time as far as the internal audits, the way the internal audit has is being managed in the BFSI sector, and technology has played a huge amount of role in shaping up the policies and procedures internal audits in the BFSI sector are being managed, are being done. Now, and why so? Because the entire sector is driven by huge amount of digital evolution. So we have seen some of the emerging trends in technology in the BFSI space, for example, there is digital lending. We have seen digital lending happening where the technology has enabled the growth of digital lending platforms, and these platforms use data analytics and AI to assess credit risk and disburse loan quickly. We have seen fintech collaborations happening. There is payment innovations where digital payments methods such as UPI, which is Unified Payment Interface, have disrupted traditional payment systems. There's advanced data analytics tools with the organizations have started using to help in credit scoring, customer profiling, and fraud detection. However, managing and securing vast amount of customer data is still a challenge, is what we've seen in the BFSI sector. There is a regulatory technology solutions which assist NBFCs, in complying with complex regulatory requirements efficiently. AI and ML are also, we have seen great, adoption here, where AI and ML algorithms are used for risk modeling, customer service, chatbots are getting used a big time and automating, and there are various other processes which are getting automated. So now, coming to what is technology's role in internal audit, I'll walk you through the next slides, but taking a pause in some of the key risks of these emerging technologies and how internal audit can, contribute in overseeing the internal controls, risk management across all of these areas. Now, coming to the emerging technologies, we have seen. Because of these emerging technologies, they pose a systemic risks. Why so? Because the entire system, the ecosystem is becoming very, very complex, and there are risk assessment challenges as far as the internal audits are concerned. Internal audits are concerned. Now, also we've seen there's an information security risks where cyber risk and financial crime is getting prominence, and hence it's very important for the internal auditors to understand and have gain experience and understanding of the IT control environment. And how we have seen internal audits have been leveraging these technology enablers to do internal audits. Coming to which I will speak about data analytics and data mining. So, what is data analytics? Like, considering we have to analyze vast amount of data, which and very quickly and accurately. So now technology has been enabling in data analytics and data mining big time. Data analytics tools can process large data sets to identify patterns, anomalies, and trends, which allows the auditors to focus on areas of high risk or concern. So we've had situations where the huge amount of time of the time and resource of the auditors are getting saved by using data analytics and mining, and the focus hence shift to the areas of high risk or concern. Now, coming to automation. Automation reduces manual efforts in auditing tasks such as data collection, reconciliations, and report generations. Now, we've seen internal auditors use automated tools for routine procedures, which again frees up their time for more complex analysis and we can focus on strategic activities. Coming to continuous monitoring, there are bots which can be enabled in the entire process workflow journeys, in the business workflow journeys, where a series of SQL queries or parameters can be set where the system can facilitate continuous monitoring of key processes and controls. This is this helps and this can help detect deviations from expected norms in real time, and this will also enable proactive risk management and immediate corrective actions can be taken. AI and ML, again, or algorithms can identify patterns and anomalies in data that may indicate fraud, errors, or compliance issues. These technologies improve detection capabilities of internal auditors and enhance the overall quality of audits. Now, remote auditing is again gaining very prominence, and my personal experience on using remote auditing during COVID times, where I had a team, and they were all based out of Pan India, and it was a branch presence where, because of the COVID, we couldn't travel to those branches, and these branches where the heavy collateral was stored couldn't be audited, and we adopted the methodology of remote auditing, where the technology was a very big support for us to audit those areas remotely and give enhanced assurance to the board and the audit committee. So this is one of the very good method which the auditors can also think of adoption, and which is also going to reduce your travel time, travel cost, and also increase your effectiveness and efficacy. Integration with enterprise system, this is again a very good in terms of adoption. Now we've seen internal audit functions often they integrate with enterprise resource planning systems, their ERP systems, and business applications. And by leveraging technology, auditors can access data directly from these systems and improving efficiency and accuracy of the audits. So we have situations where the companies have adopted companies have a data lake or data warehouse where pipes of data flow can be created, APIs can be run, where certainly certain tests which are regular and routine in nature can be performed. Also high level of the analysis can be done with respect to these datas, and the trends and the patterns can be also analyzed. Coming to predictive analysis, we've seen auditors, this is again booming, leveraging AI and ML techniques, where we can perform predictive analysis to forecast future trends and risks. We've seen organizations using predictive analysis to predict NPA numbers, future prospects of NPAs, and communicate to the management so that corrective actions can be taken. Enhanced reporting and visualization, it is a kind of a subset of an audit workflow software where technology enables auditors to present audit findings and insights in a more compelling and accessible manner. Now, visualization tools and interactive dashboards, they help stakeholders understand complex data and audit results more effectively, facilitating informed decision making. Now, enhanced reporting and visualization is also one of the great enablers for the head of internal audits, because if it's a huge team, or it is having a huge branch presence, then for the head of audit, it's very imperative to understand what's happening in each of these branches, and where are the key risk branches where the focus and prioritization rests. And basis these visualization techniques, at least the red, amber, green, in terms of the risks where the branches are we are able to understand and analyze, we can prioritize these branches for an audit. I have used visualization techniques in my previous organization, so it works very well in terms of understanding the key trends and patterns in terms of audit prioritization. So I would also recommend internal auditors to make use of these. There are many application service providers who are providing this in the market, and they're really good. Uh, Now, coming to internal audit and fraud. So I'll take a little pause over here, and it's kind of time and again it comes back that whenever there is any fraud that happens in any organization, what are the roles and responsibilities of the internal auditor in terms of fraud investigation, or providing necessary assurance services over internal controls which are designed to detect and prevent fraud. So I have taken a snippet from IIA position paper, and it talks of five key takeaways. And it also says that to start with, organization should not expect internal audit skills set to include fraud investigation. So what it says that organizations should have a robust internal control procedures to limit the risk of fraud, and internal audit's role is to assess these controls. So it talks of what internal audit should be doing in terms of assessing the controls, where the organizations having robust internal control procedures to limit the risk of frauds. Now, organizations must have a fraud prevention and response plan, including digitally data for effectively identifying and managing fraud situations. So it is a responsibility of the organization to have this. Now, what it says of the chief audit executive? It says that the CAE should consider how the risk of fraud is managed across the organization and assess the fraud risk periodically. So it's very important that the fraud risk assessment is being carried out, and the responsibility of the CAE or the internal audit team or the function to assess the fraud risk exposure periodically. It's really very important, because this is where the value addition in terms of understanding where the gaps are and then plugging the gaps, so that the risks are getting addressed in a time bound manner. Now, the risk of fraud should be included in the audit plan and each audit assignment to evaluate the adequacy of anti-fraud controls. It says that IS should support the organization's anti-fraud management efforts by providing necessary assurance services over internal controls designed to detect and prevent fraud. So I'll take a case study over here, and it's everyone knows about this case study, and why I've taken this case study is what I will talk about that also. And this is a case study which everyone is aware of, which shook the entire country big time. I'm talking about Punjab National Bank fraud, which talks of the failure of banks' internal control. So why did this fraud happen, and what was the RBI's response when the investigation happened? So just getting a recap of and a brief snippet of what the fraud was all about. So this fraud was involving some 14,000 crores of money. It is one of the India's biggest banking scam, and it was a case of financial fraud committed by Nirav Modi and his associates. And they colluded with senior PNB employees, and they used financial tools like Swift transfers to bypass the core banking system. The scam had a significant impact on various sectors, and it had a cascading impact. It had a domino effect, which, because there were other banks and lending institutions which were impacted, and this led to increase in scrutiny on the entire banking operations in the country, and there was slew of other regulatory tightening and norms and regulations which came up later. Now, what were the reasons and the failure of banks' internal controls? So, considering it is the topic where I'm discussing the role of internal audit in the BFSI sector, it's important to understand about the failure of banks' internal control, and why and RBI also felt it could have been avoided. if a strong internal control mechanism rested within the organization. So RBI pointed out that main reason behind the fraud was a failure of internal controls. The bank's internal control system were unable to detect the fraudulent activities which led to the scam. So, what was the role of SWIFT and letter of undertakings which were issued? The fraud involved misuse of SWIFT messaging system and letter of undertaking, and the bank's internal control failed to detect unauthorized SWIFT messages and LOAs issued by the employees. The CBS and the SWIFT messaging system were not found to be integrated. So when these systems were not integrated, this was not able to the fraud persisted and it occurred, and then we were not able to find out until and unless the new person in the company joined, and then this later on this entire scheme of things was unearthed. And hence it is a responsibility of the internal auditors to understand the control environment when they audit, to go through the policies, procedures of the company, assess the risks, what can go wrong, and are there adequate amount of controls that rests within the control environment. If not, it is a responsibility of the internal auditor to recommend, to suggest process improvements, process strengthening, so that the entire control environment is guarded, safeguarded, well controlled, and hence we can give enhanced assurance in terms of the operating effectiveness of the control environment when called and asked for. Now, delving into some of the developments in the internal audit profession and standards on internal audit, ICI has been issuing, there is a series of technical guides for NBFCs, banks, which I'm highly recommending, the audience, the viewers to, go through it. Now, standards on internal audit, they represent codification of best practices in the field of internal audit. An application of standards on internal audit is recommended as their aim to increase the overall credibility, consistency, clarity, and comparability of the work performed by the internal auditors. So, hence, it is highly recommended to read, to go through the internal audit standards and the technical guides while applying. While application of any internal audit area. So this is going to benefit the community. What I also do is, like, personally, I ensure that my team goes through the standards, and we do a refresher time and again, so that we are all well versed with the regulatory requirements which keep coming in with respect to the internal audit standards which gets published by the institute, and also the technical guides which gets published by the ICAI. So from this, I come to the end of my presentation. I can take any questions if people have. So, finally, would like to thank Preeti ma'am and the entire members to having me here to and giving me an opportunity to present my views. Thank you so much. Really appreciate, and I hope everyone understood the requirements and the roles and the responsibilities, and were able to gather inputs.
Thank you, ma'am. That was a really good session, very enlightening, and great knowledge sharing. And you really emphasized on the role of how technology is so important in today's internal audit. Okay, it was really great. Yeah, thank you so much. Thank you to the entire WMEC team, and thanks to our chairperson WMEC, Preeti Savla ma'am, for this opportunity, and also all my co-coordinator moderators. Thank you so much. It was a great session, ma'am. Thank you.
Thank you so much, Jayanti. I'm somehow not able to switch on my video, so
Okay.
just pardon me for that. Thank you so much.
Thank you so much for your.
Thank you.
Thank you. Thank you all. Yeah, over to the technical team. Yeah. Thank you.
So I'll leave now. Thank you.
Yeah, thank you.
Can I leave? Yeah, thank you. Bye bye.
Bye.
Yeah,
Hello.
I can just switch on my camera. So thank you so much.
Yeah, thank you. Yeah, thank you, ma'am. Thank you all. Yeah. Yeah, I think, yeah, the session is done. Thank you.